Hi, welcome back. I'm Brad Levin. It is March 12th, 2020, coming to you again from the offices of Legacy Wealth Partners here in Calabasas, California. And today the stock market's experiencing, again, extreme selling pressure. Europe, in fact, is having their worst day in their stock market's history, and our Dow Jones index was down over 2,000 points at the lows of the day. The question on the minds of many investors at this point is, how bad is this going to get? How low is the stock market going to go? How should I respond to it? What's going to happen with the coronavirus? There's just so much uncertainty, so it's naturally unnerving for many people. So let me try to frame some things for you. First of all, as far as the stock market's concerned, yesterday we officially entered bear market territory, which is defined as a drop of at least 20%. As of this morning, we're down at least another 5%. Based on history, the magnitude of historical bear market declines, the average has been about 30%. So I would tell you, based on that, we're probably sitting about 5% above the lows that we'll see in this cycle. Now, what I'm watching very closely is the level 2,350 for the S&P 500 index. That's important for two reasons. That would mark exactly a 30% drop from the peak, and it's also the level at which we saw the stock market stop falling in December of 2018 before a rally began off that level. So we're watching that really closely. But what do you do in this environment? Does it make sense right now to sell all your investments and go to cash to protect against further losses? What I would tell you is that at this point, it's probably already too late to do that based on how much we've already seen the stock market go down. People have the tendency, though, to sell all their investments at the last point where they can't tolerate it anymore, just before a rebound eventually ensues, which it always does. On the other hand, if you're a regular saver contributing right now to your 401k or through a regular monthly investment program, this is a great opportunity to take advantage of because stock prices are a lot lower. Now, we're sitting here looking at the investments that we have in client portfolios and other things that we would like to own, seeing that we are seeing great prices that we're going to take advantage of ultimately once this crisis subsides. What I would tell you as well is what we've done in our client portfolios thus far, and that is for all of our clients at Legacy Wealth Partners, we set a maximum level of risk that we're not going to exceed despite the environment's attractiveness. So what we've done actually over the last few weeks is to cut back on that exposure to risk. We look at it, it's kind of like having a speed limit. If you're cruising around the road and all of a sudden there's obstacles ahead, do you keep going the same speed? No, you cut back to try to protect yourself against that oncoming risk. And that's what we've done. As an example, in a portfolio we manage called the Global Allocation Balance Portfolio, we can have as much as 70% in stocks, but today we've dialed that down to where we are now at 45% stocks, with the rest in bonds, cash, and gold, which have been great defensive hedges in an environment such as this. Now, here's what I can tell you. We're likely to see that the economy is going to experience a contraction. We will define that as a recession. But we're also likely to see a global concerted effort to try to backstop the global economy. Now, remember, we were in great economic shape just a few weeks ago. So what I expect is that we are likely to see the Federal Reserve come to the aid of the public by offering lower interest rates and also providing additional liquidity to the financial system. The government will offer additional stimulative measures to be signed off on by President Trump, initiated by Congress, and we're likely to see stimulative measures initiated by countries around the world. Also, what I expect to see is that OPEC and Russia will get back together at the bargaining table and agree to cut the output of oil, so that'll stabilize the energy market. So these things ultimately will work. We will see an end to this crisis. People are wondering how bad is the coronavirus going to get, and who knows? The reality is it's likely to get worse, guys, before it gets better. But is it going to wipe out the entire global population? I don't think so, and if it did, the reality is it wouldn't matter what our balance in our portfolios would be anyway, but that is not likely to happen. We will get through this just like we've gone through every crisis in the past. The economy will stabilize, the market will recover, and we will move to all-time highs because that's what's happened every time in the past. Now, while we go through this period of volatility, understand that we are here for you. We're here to talk and listen and address your concerns. Whether you're a client of ours or not, you can simply reach out to us. We're here working, ready to listen and ready to talk. Again, I'm Brad Levin. Thanks for listening today.